The aerospace stock everyone was watching just slammed on the brakes. AIRO Group's IPO was supposed to launch in April. Everything was lined up, but at the last moment, it was pulled. No warning, no timeline, just silence. So what happened behind the scenes? And is this still a stock worth watching? Hey everyone, Robert here. Welcome back to The Alternative Investor, where we uncover opportunities others miss and dive deep into emerging companies before they make headlines. Today's story is about AIRO Group Holdings, a bold player in the aerospace and defense world that was gearing up for a high-profile IPO this April. Now, if you followed this company, you know the excitement was building. A diversified business model, exposure to hot sectors like drones and electric air mobility, and a Nasdaq debut that could have made it one of the most talked about small caps in aerospace. But then, gone. Just days before launch, the IPO was canceled with barely a whisper. Today, I'm breaking down what happened, what we've learned since, and whether this delay signals deeper trouble, or a chance to get in ahead of the crowd. AIRO Group isn't your typical aerospace startup. They're more like a holding company built to capture the future of flight from multiple angles. Their operations are spread across 4 key business units: uncrewed systems like drones, advanced avionics, aviation training and simulation, and electric air mobility. Yes, we're talking electric vertical takeoff and landing style innovation. This blend of defense contracts, pilot pipeline development, and cutting-edge aviation tech made them stand out in a crowded space. Unlike many startups chasing just one futuristic idea, AIRO is going for a full-stack ecosystem, which could become a competitive moat as the aerospace sector modernizes. That's why this IPO got serious attention, not just from retail traders, but from institutions and venture players looking for exposure to the next Lockheed meets Tesla of the sky. The company's roadmap showed they weren't aiming small. With military-grade drone work, flight training infrastructure, and emerging electric aircraft programs, AIRO positioned itself as a modern, vertically integrated aerospace platform. The public debut was planned for April 17th. AIRO had filed to offer 5 million shares in the $14 to $16 range. That would have raised about $75 million in gross proceeds, positioning them to fund expansion and research and development while gaining market legitimacy with a Nasdaq listing under the ticker symbol AIRO. Everything looked green-lit. They'd filed with the SEC, initiated marketing, and platforms like Fidelity were already accepting pre-orders from investors. It was all systems go. Then, without warning, Fidelity pulled the plug. They notified users that indications of interest were canceled. No explanation, no new date. AIRO's IPO had been postponed indefinitely, the market equivalent of hitting an emergency stop button just before takeoff. The company issued a generic statement attributing the delay to market conditions, a term that usually masks something more complex, either pricing issues, lack of institutional support, or unresolved regulatory or financial disclosures. It's also worth noting that this wasn't AIRO's first time trying to go public. They previously attempted a special-purpose acquisition company merger with AIRO Group Holdings back in 2024, but that deal was scrapped as well. 2 failed attempts in less than a year starts to raise questions about internal execution or investor readiness. When you look at the numbers, you start to see why the IPO may have hit turbulence. Over the past 12 months, AIRO pulled in about $86.9 million in revenue. That's not bad for a mid-tier aerospace company. But the catch? They also posted a net loss of $38.7 million. That kind of burn rate, combined with a complex multi-segment business model, can make risk-averse investors nervous, especially in a tightening capital environment. The company likely hoped that strong revenue would outweigh the red ink, but without profitability on the horizon, institutional buyers may have hesitated. Investors are becoming more selective, especially when it comes to pre-revenue or cash-burning companies in speculative sectors. And with other defense and electric vertical takeoff and landing stocks still struggling post-IPO, think Lilium, Archer, and even Joby, it's possible that AIRO couldn't get the valuation it wanted in this market. That alone could have forced a delay. So what does all this mean for investors? There are 2 ways to look at it. On one hand, 2 failed IPO attempts in a single year is a clear warning sign. It suggests either internal instability, poor timing, or a lack of confidence from the institutions that typically anchor IPOs. If AIRO can't build credibility with the big players, it could be in trouble. On the other hand, this might just be a case of poor timing. The market is volatile. Tech and aerospace IPOs are out of favor. And if AIRO can tighten its messaging, clarify its financial outlook, or even secure another round of private funding, they could come back stronger later this year. Remember, some of the most successful companies in history like Airbnb, Facebook, even Google, postponed their IPOs before eventually launching at the right moment. Delay isn't death, it's a pivot. For long-term investors who believe in aerospace innovation, AIRO could still offer exposure to drones, electric vertical takeoff and landing, and defense tech in a single play, once the dust settles. So far, AIRO hasn't announced a new date. Their S1 is still active, but no guidance has been given. The most likely scenario is that they revisit the IPO in the second half of the year, potentially with adjusted pricing or after locking in new commercial contracts. Until then, watch for signs of traction. Do they win new government or private sector deals? Are they trimming expenses or reorganizing business units? Any signs of stabilization could signal a potential relaunch. Keep an eye on their communications. A quiet delay can either turn into a quiet collapse or a strategic re-entry. It all comes down to execution from here. To wrap it up, AIRO Group's IPO was shaping up to be one of the more exciting entries in the aerospace sector. But a last-minute cancellation now has everyone asking questions. Whether this is a stumble or a strategic pause, one thing is clear: this company is still aiming big. The question is whether they'll get another chance to prove it. I'll be tracking every development right here on the channel, so make sure to like, subscribe, and tap that bell so you don't miss the next update. Let me know what you think in the comments. Was this just bad timing, or are we seeing deeper issues emerge? I'm Robert, and this is The Alternative Investor.